All right, so I wanted to do a quick update here before CPI tomorrow and just kind of an intra-week update based on what's happened on the first 2 days of the week. So I'm just going to cover like SPY and Qs and a couple tickers. For ES here, I have a 1 hour chart. You can see quite the big downtrend from the all-time high from mid-July, but we have had a pretty nice bounce from the low here that we made last Monday after the big sell-off in Japan and everything. Went all the way down to almost 5,100. Did we actually hit 5,100? Not quite, I don't think. And now sitting at 5,450. So 350 points straight up in like a week. Not necessarily straight up. We did have the big dump here, but quickly recovered that. And it's been a nice little grind up, but I still think things are quite bearish. And I think that we had some excellent setups triggered today, which I actually think is kind of unfortunate because it happened in the last hour of today, the day before CPI, and I was just not super comfortable entering the position that I had been watching for several weeks to, or really a couple weeks to hit, and it finally hit today, and it just happened to be right before CPI. So that really sucks. I don't want to gamble before CPI. I don't know what's going to happen. I have no idea what the number is going to be or how the market might react. There's a lot of craziness going on with the rate cut expectations and the potential cut. There's still some Fed speakers talking about how they're not going to cut, but I think at this point they're most likely going to cut at least once by September, if not more. But that being said, it's still pretty much impossible to tell what the initial reaction of the market's going to be because there's no telling. They could spin it bullish or bearish either way. A lot of people are hyping up the rate cuts as bearish. I think that's kind of a trap. I do not think the rate cut is, or sorry, they're hyping it up as bullish. And I do not think that it is bullish at all. I think it's quite bearish that the Fed is beginning to cut, and throughout all of history, after they cut, that's when the real bear market starts. So that's kind of my thoughts on that. We'll see what happens with CPI, but for now, I'm just going to stick to the charts because there's just too much volatility and indecision. There's potential war. There's all kinds of things going on with inflation and everything else. So I think it's important to just kind of stay grounded and just focus on the charts and try to be realistic and objective. So for ES today, had the big rally off of PPI, came in cooler than expected, which could signal a cooler CPI as well. We'll see, but I had been watching the 54 35 level, which was this low back from late in July. We had a low here and then a really nice bounce off of it here, and we went straight through it. And I thought we would fail on the first retest, but actually we kind of just went straight through it. If you look at the 15-minute here, you can see that we actually had a really nice retest, great potential long opportunity. I was actually talking about this at the time, but like I said earlier, like I just did not want to trade in like the final 2 hours before CPI like too much. I'd been adding puts throughout the day, but decently long expirations and not big size on the shorter dates just because of CPI. But you can see we did have the really nice retest after we did break above it, and we had some initial selling at the line. You can see there was an upper wick failure, but eventually it just ended up breaking and then held on a retest and just kept grinding up. So pretty big day. I think the Nasdaq was up over 2%. I'm not sure how much exactly. Oh, it looks like SPS was up 1.69% and 2.5% for the Nasdaq. So that's pretty substantial, obviously. And we had this ascending wedge, which I thought was bearish as well. But after several rejections, we finally just broke straight through it, and then also really didn't have trouble at 54.35 either. But there is this trend line to just above, which I think is pretty major. But honestly, this is not the most important chart to me right now because I do think this trend line is important, but you can see price just kind of chopped right through it a couple times. It did kind of hold here and then provide a nice flush when it broke, but overall, this isn't like super clean. But I am still watching this trend line. But really, I think the supply zone above is going to be a much better short if it hits, but I really am not sure that it will. But the main thing that I am watching is this chart on NQ. I've been talking about that a lot. Like I was saying, I've been waiting for this retest of this trend for a couple weeks now, essentially since it broke, and we got it today. But the timing's not good. I don't want to just full port short right now. So I didn't really do it. We'll see what happens tomorrow. Maybe I will have saved money because maybe it won't work and we'll just go straight up. So I don't know, but to me, this trend breaking from the uptrend from 2023 breaking, I think, is highly significant, and this is the very first retest, and I would fully expect a failure here. This is ever since we broke, I've been saying I want to short here. So we'll see if it works out or not. And it's not just this either. Like I showed on ES, there's other reasons to be bearish on ES as well because it's still below some critical levels. And then SPY as well has sort of the same kind of look where we had this uptrend that it broke below and had a big gap down, big flush, big move down last Monday, and then essentially went straight back up and tapped the line again today. Basically closed right on it too. And in addition to this trend line, you can see it just had a perfect upper wick rejection so far. But there was also this 542 level, which is previous support from back here in June. So that led to this big rally after it bounced here. So lots of really critical areas here, and this is really the first retest since both this 542 level got broken and this trend line. So hitting both of these at the exact same time, right before CPI, as NQ is also hitting its trend line. These are the setups that I live for. These are my favorite kind of setups. The best setups happen when the Nasdaq, the S&P, and VIX all line up together perfectly, and that's what we're seeing right here. We saw something pretty similar in June too, where we had a lot of things going into resistance, and it looked like VIX was potentially at support, but it was really beat down and dead at the time. At this point, VIX has been falling a lot since the big spike, but it's not like it's at all-time lows like it was in June. So, and that's the other chart that I wanted to get to. So this is a 1 hour on VIX. So initially, I was thinking that we would hold on the retest of 2140-ish, which we did here. And then I thought if we broke, we would hold the trend, but we didn't do that either. We broke below, and then it's just been downside since. We've nearly had a retest a couple times, but not quite. Either way, the level I was watching after this pennant broke or wedge, whatever you want to call it, was this previous high from back here in May of this year that had a bit of a fake out above and then finally broke above for the huge breakout. So we are right back at it right now, and we actually already sort of bounced off of it. Didn't quite touch it, but really, that's pretty close. So um, seeing VIX at support, major support too. Like this is very, very critical. Same for the Nasdaq. Like yes, Nasdaq does have this shorter term downtrend that it did break above and close above today. But if you'll see, it's already rejecting this trend line because this trend line is it goes over like almost a full year now. Whereas this was basically just a few weeks. So the more major trend line is going to take precedence over the small one. So it's always important to remember that we do see a nice bullish breakout and a really nice rally from the lows. But even though we did break above this downtrend, we still have some really major resistance right above that. If you were only watching this shorter time frame, you would not see this, and that could potentially be very detrimental if you're longing into this trend line like that. I really think this is one of the best short setups I've seen all year long. It rivals like SMCI and Tesla from a little bit earlier in the year, and things like Lulu too, and Crowd even. It's just a really fantastic technical setup. If you ask me, I've been waiting for it. It's unfortunate it kind of got spoiled by CPI, but I think either way, even if I'm wrong, this is probably going to create a huge reaction. Either way, we essentially closed right on this line. Everything closed right on the line, and you will most likely react to CPI or something very soon, and there will be a big move either up to the supply zone, which would be my first target to the upside, or we're just going to come all the way back to these lows from that sell off. This is also the April low. And if we do break this April low, which I think is very critical, I think that the fact that we broke this uptrend and this low, I think would be very bad and would lead to a lot more downside. But we do have the previous high from July of 23 that could hold as well. Not too far below, like not even a full 1,000 points. So even if it does break the April low, maybe it holds here. But I think after this, really, then I'm looking at the 2023 low. But a long way to go for that. I mean, we're obviously up almost back to 20K already. So don't want to be overly bearish just yet, but I really do. I like the setup. like I've said, and there's a lot of other things backing it up too. If you look at a lot of the Mag 7, we're seeing something very similar. Apple is actually one of the more bullish ones. It was able to reclaim this uptrend today, but Microsoft is another pretty bullish one. It held this uptrend from November of 23 after a wick below, and also held the 400, 396 to 400 area. It's basically been in this range from 400 to 430 since January. So it's really been stuck in this range for a long time, and every time it tries to break below, it can't do it. So now it's smack in the middle, but overall, I would say that looks fairly bullish. For Nvidia, it's still below 118. That's all that really matters to me. We'll see if it can break above or not, but as long as it remains below, that is a bearish stock, if you ask me. Meta is back near all-time high, which is kind of crazy. It looked like it might reject this previous high right around 525, 527. It ended up going above today, all the way up to like 530 plus, but did kind of have a bearish close and closed basically right at this previous high. So kind of make or break for Meta as well. And then Tesla is like my favorite short right now, or at least, not necessarily shorting today, but since I have been short like all the way up back from up in this area. It's been one of my top positions, but I'm mostly out of it now. But it is looking kind of bullish too. I thought this was going to be a bearish break to the downside. I posted a trade idea about this, and today it broke to the upside after a brief move below. It held this 198 to $200 area, which was a gap fill from earlier in the year, and it also broke above this gap fill, which around the 205 area. So I thought that this might fail too, but so far it hasn't. So next target would be 215 for me if it keeps going up. But overall, after seeing this massive fake out above this trend line, I think this thing is just doomed. It doesn't really matter to me if it comes all the way back up to this trend line at like 225. That's still bearish in my opinion. You just if you don't have time on your contract, so that doesn't matter. So you always have to keep in mind what time frame you're looking at, because obviously you don't want to be in short-term puts if this thing goes to 225, but if you're in some longer dated puts like I am, it's not so bad. Amazon, I thought, would potentially fail on the retest of this 167 area. It gapped below right on it essentially, and it sold off. Came back for a retest. It rejected several times, but ended up pushing up above it. So I would say that's pretty bullish, but a long way to go. There was a big gap here. It's got to fill, and it's quite a ways away. So overall, this is a very bearish ticker too, I would say, even though it did just hold some major support. So we'll have to see where it goes. But these trend breaks are just really bearish overall. And then Google, I actually took a small short on Google today. There was some news after the bell too about a potential DOJ lawsuit trying to break up Alphabet or something like that. So that would be nice for me if it gapped down tomorrow because of that. But overall, I don't know that's really going to affect the action tomorrow. I think it's going to be more about what the Nasdaq does after CPI. So a lot of these stocks, as always, they follow the major indexes. That's just how the market typically works. Sometimes you have outliers, but for the most part, whenever you're looking at these patterns on these individual tickers, you need to be considering what the Nasdaq is doing if it's something like the Mag 7. So always keep that in mind. This might look very bearish, bear flag. It's been straight down since this trend break, but if the Nasdaq just keeps rising, this thing's not going to sell off most likely unless it has some highly specific news. So yeah, that's pretty much the entire Mag 7. Another short that I like today, I'll talk about real quick, was Coin. Sorry, this chart has a lot of lines, but um, I took a short on Coin because I like the way this bear flag was looking. We broke this trend line, which goes back quite a long ways. I don't remember exactly where it started, all the way back from 2022. And we had broken above it and had a nice sustained rally above, but broke it. And now we're just kind of consolidating here. I would consider this bearish consolidation. So I took the short essentially because I see this sort of bearish formation. Maybe it looks better on like the 1 hour kind of ascending pattern here. I had this trend line that it did break above, but overall it was still kind of in a bear flag formation and retesting this major low. And there's a bunch of major lows here from back earlier in May of this year, and the fact that it broke below so hard and it's coming back for a retest, like many things with a bearish ascending wedge, I think it's ripe for a failure. But again, anything can happen with CPI and anything else. We have tons of potential catalysts in the near future. So just gonna have to kind of be nimble and have the ability to admit when you're wrong and stop out of positions and move on, because not every trade's going to work, and this market is pretty volatile all of a sudden. So it's difficult, but if you zoom out on the higher time frames, you buy time on your contracts, and you're not trying to trade like 0 days or weeklies or far out of the money. You can be fairly safe if you wait for good setups with good risk management. So that's what I'm going to be trying to do. Like this setup, for example, I thought this was great because of the major trend break, and I short right here on the retest of these lows. If it doesn't work and it keeps going up, well, I'm just out of the position. Then maybe I'll try to short on a retest of the trend line or something if I still want to be bearish at that point. But that's just an example of how you can structure your trades and look for entries that allow you to exit for small losers when you're wrong and hit some pretty nice winners whenever you're right. That's the ultimate goal. It's always about gain loss ratio. A lot of people focus on win rate and that, which I think that has some value, but overall, win rate is useless if you are losing more money than you make whenever you lose a trade versus make money on a trade. So that's something that I always try to put a big emphasis on. So I think it's going to be a big day tomorrow, and potentially the next 3 days are going to be wild, or maybe we'll just flatline and chop into OPEX, and the real action will start next week. Don't really know, but just be careful about chop into OPEX. But I do think maybe tomorrow and Thursday could be pretty good. So we'll see how it goes.